I think the recent rate hikes which we have seen of late has to be seen in context of the market segment we are referring to. Obviously, we believe that the mid-market and the premium segment should be more impacted than the affordable segment, because I think the sensitivity to people uh, who are getting the best kind of rates, and I'm sure this was this class of segment which was able to get the best rates. So there, we think we should be seeing an impact. But if you talk about affordable housing or the underserved population in general, any which ways, I think there that rate sensitivity is slightly lower in comparison to the mid segment and the premium segment. So for sure it will have an impact, but I think it will be having more impact in the mid segment and the premium segment for housing loans. For affordable, it should, so far, whatever has been done, should be still able to absorb that. So we have not seen in the housing finance sector a lot of involvement of tech historically. Maybe the kind of the nature of the transaction it has, in terms of there's obviously a customer appraisal which has to happen, and then there's a collateral which is involved. But we at IIFL Home Finance have tried to redefine that. And just to tell you that our 100% of our home loans are today digitally onboarded and decisioned. That means there's no credit manager which is involved. So under 30 minutes, our sales guy will get up telling you this is your eligibility and this is you can get or you can't get a loan. So we've been, I would say, a kind of front runners in this to introduce technology, because it's not just technology you have to use for the sake of technology. If you want to address this market, which is the affordable market, where the ticket size is lower, the transactions run high. So the OPEX is very, very high in this business, right? And it can't be a business which can totally be done digitally like an unsecured would be possible. So you need to have this. And if you want to scale in affordable, you need to have technology. So we have taken a lot of initiative, like I told you, just about the credit onboarding and decisioning. So that's cut down, and usually our productivity is at least 2 to 3 times more of our salesperson than anybody in the industry. Beyond that, we've been trying to extend this to documentation as well. In India, the housing sector is pretty complex. Every state has its own legal and technical issues and bylaws and so on and so forth. It becomes so hence the involvement of the human intellect has been very necessary or mandatory in this. But we are trying to standardize and even prototype that as well. So we see that that's why we've been able to do just retail affordable business and still have a very competitive cost income ratio, which otherwise has not been the case. Yeah, I think co-lending, we don't have any information or data, but I think we must be one of the few housing finance company which have done a reasonably significant business. So like as of March, we had done co-lending of over 1,700 crores. So which was something I think we would be one of the front runners in the top 2, 3 for sure. I can say that. So I think this is an idea which is a short success in terms of the needs of both sides. Right. So I think there is no logical reasoning to say that it should not work. Right. But however, I think it has its own challenges. Currently, we already have 5 partnerships signed up, majorly with the public sector banks. And we are very happy and hopeful for that. And we have to see this in 3 parts. One is the initial part of signing the agreement and agreeing to the policy and everything, because there's a lot of non-standardization. Every bank has its own rules and norms, which is there, right? The second phase is how do you ensure that operationally it is doing fine. And the third phase, which this industry will realize after a year and a half, would be whose quality is better. Ultimately, banks also don't want to do retail if it's not good credit. So I think this is absolutely an amazing idea. We are personally very optimistic about it, and that gives us a lot of leeway to scale to very big numbers in comparison to had co-lending not been there. So we are very much into it, and we believe that this will form a very significant part of our liability strategy.